Hi there, folks. This is Sam Price, and I'm host of Probate Notes. And I have with me today a very special guest. She's a friend of mine. I've known her for a very long time, and she's going to tell us a bit about marshaling financial accounts. Please welcome Jennifer Fejzic to the show. Thank you for being here with me today.
Thank you so much, Sam. I'm really enjoying talking to you about this.
I know, and I tell everybody, like anybody that knows you, they know you as a person that's never had a bad day. The
No,
person always a smile on your face every
that's
time.
so nice.
Yeah. So you have your probate fiduciary services is part of what you do now as a professional fiduciary, but tell us a bit about your background and how you got there.
Okay. Since 1993, I was a probate paralegal working in the local area. So I've worked with a number of attorneys in the Redlands area. And after doing that for about 25 years, I decided that it's time to move up to becoming a professional fiduciary so I can help people more hands-on and directly.
That's awesome. And so how long have you been a professional fiduciary?
Since 2018.
But really you've been in the probate world for much longer,
Yes,
over
yes.
30 years.
Yes, over 30 years, yes.
That's great. So how do you like your work as a professional fiduciary as opposed to a paralegal?
Oh, well, I liked both, doing both things. I really liked work in the probate arena, but I like really being a professional fiduciary because I have my own clients that I can help and I can bring meaningful benefits to their lives. And it's just very rewarding work.
It's great. That's awesome. So I wanted to dive into a bit about marshaling financial accounts. And can we first talk about getting cash accounts? I'm talking like checking accounts, savings accounts, CDs, money market, this type of where there's money in the bank.
Yes, that should be your very first step as a newly appointed executor or administrator of an estate because you are going to soon be needing to pay things and getting cash accounts out of the bank is pretty much the easiest thing to marshal, although it can be harder than it sounds. So what you need to do is you first need to identify what bank accounts the decedent has and make sure that they're in the decedent's name only. They're not held jointly with another person. And you also have to find out from the bank if they have a beneficiary designation on them, because then you will not be able to marshal them into your state. So after finding out which banks the decedent had accounts at, you gather all the documents you need, which would be your certified letters of administration or your certified letters testamentary. Then you're going to need a certified death certificate, and you need the EIN from the IRS, the employer identification number from the IRS, and you need your driver's license along with a copy of the statement if you have it. And what you're going to do with all these documents is you're going to call the bank before you pop in, and you're going to ask for an appointment with a manager because the teller is not going to be able to help you at all with this. And if you can even, when you speak with the manager, if you can email them everything, it's going to greatly ease your day at the bank because they can send this all over to legal before you come in, and maybe you can accomplish this in one trip.
For an estate. Do you have certain banks that you work with that you work with regularly, or do you just open it wherever that the decedent had an account?
No, I usually do not open it where the decedent had an account. I usually work, or almost exclusively work with local banks that also have a fiduciary department, and that they have like a probate department, a probate manager, because that banker will be very, very helpful. That banker will be able to get you really high rates of returns, and if you have a large estate with over $250,000, they will be able to get you something called CDARS accounts where they ship the excess money that's not federally assured to other banks, so that all of your money remains federally insured. So they can do lots and lots of things for you. And so it's very valuable to have this sort of banking relationship. And there's several banks in the area that have these kind of bankers.
So do you know what the bank needs in order to open? So you went and got the money for the estate. Um, do you know what the bank needs in order to open an account for the estate?
Yes, they also need your certified letters of administration. They need the decedent's death certificate because they're going to need to know both the decedent's date of birth and date of death in order to open up, and the social security number. They're the know your customer laws are really, really strict now. So every single time you open up any sort of a fiduciary account, like a probate account or a conservatees account, they really need to know like who this money is connected to. So they're going to need that information from the death certificate, and they also need the EIN from the probate estate or from the IRS.
I'm finding that they don't just need the number, but they need a copy of the actual letter.
Yes, they do. They need that. They need that, or they need the tax return. They aren't going to just take your number. I mean, they have to, their back office makes a file, and they're very strict about having every single thing in place before they open up accounts because that's because of new federal banking laws.
So when it comes to going back to marshaling cash bank accounts, do you have any best practices or any tips for people that might be going to and encountering some of the challenges that you also faced?
Yes. Um, a good tip is to, as soon as you're appointed executor or administrator, to change the decedent's mail to your address. And the post office is getting trickier about that, stricter. So they're going to, they are going to want to see the decedent's driver's license if you have it. May not have that. So then you're going to have to go into the post office and you're going to have to show your letters. And it's it still may take several trips to the post office these days to get the mail turned over, but you're going to want to do that because that's how you're going to find out what bank accounts, every month when they get their statement and stuff, you're going to find out what kind of financial accounts they had. If you can get the decedent's computer, that would be, and can get into their computer. Very many people now don't get paper statements; they just get electronic statements. I mean, if it's a family member, you may be able to get in their computer. You may know their password, but you know, the mail can't really be counted on to get all of the statements. So you may have to find a tax return or ask your CPA to run a tax transcript request so that you can see what kind of interest they're getting and where those places are. That will clue you in on which banks to go to.
Really good.
It can be tricky, it can be tricky finding all the decedent's assets.
And previously, you said part of the reasoning of liquidating an investment or brokerage account was what if the market crashes and all of a sudden that stock isn't worth anything? Is there that same issue or that same worry with a retirement account?
Well, that could also happen, um, but I believe that you should still on a retirement account, you should still consult with your attorney and the attorney or with the heirs, and with your tax person and just come up with a plan.
Yeah.
Um, yeah, that can happen. I mean, sometimes companies go totally under and their retirement accounts aren't worth anything any longer. But I think that you just have to. You can't foresee the future, but you just have to do the best you can. Best practices.
I bet also the financial advisor would probably be able to rebalance the retirement account because again, it's held in a retirement account. So they could sell some securities and buy other ones to make it more sound,
Yes,
fiscally sound if it's in a retirement account, which maybe that same opportunity isn't there for an investment account.
yes, yes, yes. A lot of older people, if they worked for Edison or Lockheed Martin or whatever, their entire retirement account is in their company stock. So that
Oh,
can
okay.
be, yeah, that can be problematic for some people. I mean, that's happened. Retirees have lost all their money before um, because that one company went under. I think
Mhm.
that's pretty rare. So
Right. But always best to kind of reach out to a professional that handles that to let them be able to tell us what's the best way to handle it.
Yes, it's always good when you get brokerage accounts is to run them by your financial advisor and see if they see anything glaring that you need to take action on.